Wednesday, October 16th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start this morning, I'd like to thank all the viewers, all subscribers for their continued support of the channel, for the interest in what I have to say, for their participation, feedback on the live streams, also in the comment section, also for sending emails with information and links. That really helps. Interaction is important. Yes, thank you very much again. This morning, I want to talk about how we can go a long way. And by we mean the general public, not the 1%, not the people running the central banks, right? How we, the public, can go a long way to defeating the central banks, to actually giving them something to think about. Many of you have heard recently that the Dutch central bank has actually admitted how gold is so important to them. So you can see why there is, there has been a psychological warfare and against the general public for centuries. It's not just recent. The powers that be don't want people like us to protect themselves with real money. And what I mean by real money, I mean sound money like gold and silver that hold their value over centuries, right? They want us to be in their fiat scam, their fiat currency debt-based system that keeps them in charge, right? Because they're able to, through the monopoly of central banking and their agent banks, they're able to create credit out of thin air and lend it to us at interest. So they lend us money that they don't have or credit that they create from nothing, and we have to do real work to pay them back with fiat money, of course, that we earn through our efforts. And that's what gives the fiat money some semblance and value, the fact that they are able to tax us as well and charge us interest as well on the debt, national debt, that is encumbered on the general population, not only the current population, but future generations. And that's why it's so important to, if you're going to accumulate gold and silver, to accumulate the physical, to stack. There's nothing better than stacking. Why? Well, first of all, it's yours. It's in your hand. There's no counterparty risk. And second of all, you're withdrawing physical from the market. And the bankers hate that. That's why they hate to admit even that gold is really important to the system. So the fact that the Dutch central bank has admitted that means that they're really worried, because someone at the Dutch central bank, probably high up, was very probably skeptical about publishing this. You've seen recently Jay Powell in Congress testifying. A congresswoman asked him about gold, and he said, "Yeah, gold is no good, right? We're never going to use gold to help the system." You remember Ron Paul asking Ben Bernanke probably a few years ago, well, quite a few years now, what gold was, and Bernanke just said, "Oh, it's tradition." And Ron Paul said, "So why do you hold it as an asset?" "Oh, it's tradition," right? They don't want to admit that gold is so important. Yes, I have to admit and be honest with you, I don't like seeing the price of gold fluctuate, but you shouldn't really, and I know it's normal for people who hold physical gold to be concerned, and sometimes I am, but when things get kind of discouraging like they are at the moment with the markets, I try to think about the alternatives. Do I really want to take my savings and give it to the bankers? Lend it to them, right? Because money in the bank nowadays is a unsecured loan. Do I really want to do that? Do I really want to continue to sponsor their shenanigans, which they haven't reformed from in the '08 crisis? What happened in the '08 crisis? The bad actors, i.e. the bankers on Wall Street, City of London, Paris, Frankfurt, they got bailed out and were given even more money. So do you really want to participate in this? Do you really want to reward these people? The best way to fight them is through physical gold. Some people might ask, what about ETFs? What about GLD? Well, I've got something to say to you. We've been speaking about recently here in this channel about HSBC, how they were caught in 2012 and fined almost $2 billion for money laundering, right? There was John Cruz, the whistleblower, talking about how they're involved in criminal activity. So you go to the prospectus of GLD and you read, where is the gold held? So it says, where is it held? Number 7, the gold that underlies the trust's shares is held in the form of allocated London good delivery bars, typically referred to as 400-ounce bars, in the London vaults of HSBC Bank PLC. That's the bank that's holding your gold, the bank that has been found to have been in the past involved in criminal activities, the bank that was let off by the DOJ back in 2012. DOJ only slapped it on the hand and gave it a fine that they could easily pay. And do you really want to deal with HSBC? HSBC stands for Hong Kong Shanghai Banking Corporation. It's got nothing to do with being from Hong Kong or Shanghai. It's actually a British bank that was started in the 19th century when the British were selling opium to the Chinese. When they're flooding China with opium, they've been involved in these kind of activities for hundreds of years. Do you really want to safeguard your gold with them? So that's what I'm trying to talk about. You need to keep stacking. And the Dutch central bank has even admitted that their gold stocks will help them to come back to life once the system implodes. Do you really want the central bankers to come back to life? Do you really want the central banking system to be able to reset? I don't. I don't want to see that. And that's why I encourage the general public to always get physical, not only gold, but silver as well. Gold, of course, 1 ounce gold is quite a lot of money now, quite a lot of fiat money, of course. But there are smaller denominations. You can buy 1 gram of gold, or you can buy 5 grams or 10 grams. Silver, of course, is very cheap at the moment. So that's also the other way to go about it. So yeah, stacking is the best antidote for central banking, for the fight against the globalists, because the globalists, believe it or not, that's their currency, gold. And they don't want you to be, how can I say, infringing on them. Without gold, they can't control us. And you might think, what do you mean? We're not on a gold standard. Yeah, we might not be legally in a gold standard, but de facto we are. Why do these central banks still hold over 30,000 tons of gold? Because they know that without gold, their paper is worthless, right? There is an old saying, right? He who holds the gold makes the rules, so to speak. Or the old Rothschild saying, give me control of the money supply of a country and I care not who makes the laws, right? So if you don't have gold, you can't control the money supply. Even back in Renaissance Italy in Florence, the general public was not allowed to deal in gold. If they wanted to deal in gold, they had to exchange with the bankers their physical silver. They were allowed to deal and buy things with silver, and that silver, by the way, was actually also tampered with by the bankers. The gold couldn't be tempered, of course. So yeah, they've been doing it for centuries, and they don't want you to hold physical gold. They discourage people. I haven't heard of any financial advisor here in the UK saying, "Oh, you should hold gold." You ask them about gold, they know nothing about gold. They don't want you in gold. And with that, I'm going to finish off with an editorial. This is an old story that I've told in the past in the channel, but for the new subscribers. Basically, this was in 2004 while I was still working in the city of London. Yes, I was a futures and options broker. I worked for the big banks, for brokerage houses. So I was part of the system. But by then, I'd become a gold bug already, and I was going to work. I was standing on the platform waiting for my train just after 6 a.m. Yeah, I used to get up very early to be on my desk at 7 a.m. And I'd bought the FT, and I was reading it on the platform. And I always enjoyed flipping towards the editorial section, and I did that. And I saw this editorial here in the FT. Whoever wrote this didn't even put his or her name on it. And it says, going gold. The pointlessness of holding bullion continues to sink in. Notice how they say holding bullion, right? Don't hold bullion. It's no good, right? And this was April 16th, 2004. Gold was at $400 an ounce. I think it was about 220 pounds an ounce. And when I saw that, I thought to myself, what the hell is that, right? So I'll go through it. This is what it says. The barbarous relic, as Keynes called it, is crumbling to dust. When even the venerable N.M. Rothschild has quit the gold market and the Bank of France, among the most stubborn of the official gold bugs, is thinking again about its bullion holdings, the end of gold as an investment has come a little closer. So notice how they're, if you don't know anything about gold and you're reading this in the FT, which is supposed to be a respected financial publication, right? You're gonna probably think to yourself when someone says, "Oh, you should buy some gold." You said, "No, gold is finished. The Rothschilds have gone. They're not involved in gold anymore." But what they meant by that was that the Rothschilds had quit the fixing mechanism, right? But you can bet the Rothschilds still have a lot of gold in their vaults. I'll continue. It will not be before time, the fetishization of shiny yellow metal decades after it ceased to be used as the anchor of the international monetary system, is a lingering anomaly in modern financial markets. Perhaps Rothschild's last service to the bullion market could be to keep a live gold trader on display behind glass as a reminder of a bygone age, like the former coal miners who now make a living giving tours of defunct pits. Well, anchor of the international monetary system. Well, the Dutch central bank doesn't seem to think that anymore, right? Nor do the Chinese and the Russians, their central banks, and other central banks around the world who have been buying gold hand over fist, right? The one advantage of gold as a reserve asset is that, unlike assets based on fiat money, governments cannot make it worthless by inflating it away. That's right, FT. But in an era of low inflation, well, you see, their low inflation is that they talk about is the statistics, fudge statistics that we're given, like CPI. It's not like the amount of money and credit that's been created out of thin air, right? And given that the independent inflation targeting central banks are the norm across the industrialized world, that risk has very sharply diminished, right? Well, things have changed since then. Central bankers around the world are losing it to FT. Indeed, for both private and official investors, gold is now a rather risky asset with a nil or a low return. So they didn't see negative interest rates coming, right? Very risky asset, right? Something that's held its value for thousands of years. You see, they're trying to discourage you from holding gold. If I didn't know about gold then and I was reading this, I probably would never have converted my fiat savings into gold. Gold does not grow, so its value to any one investor as an asset is dependent on other investors also holding it as an investment asset. The gold price hangs precariously by its own bootstraps. Well, the gold price is irrelevant, right? What you need to understand is the exchange rate of gold to other goods and services, to fiat money, and it doesn't hold. And they've been proven wrong anyway. You look back at history, paper money always falls against gold and silver, and they were wrong then. You can see the price was 400 at the time. For private investors to hold gold on this basis is their own foolish affair. For central banks and governments to hold it as a reserve asset is a betrayal of the public on whose behalf they are acting. Despite recent sell-offs, governments and central banks still hold about a fifth of the world's bullion. Their large holdings relative to the size of the market by themselves make gold particularly ineffective as a reserve asset. Well, go tell that to the Dutch central bank now, FT. The very act of official selling of bullion on any large scale to raise cash will itself drive down the price. This danger was amply demonstrated by the UK's unhappy experience trying to sell some of its gold holdings. Announced in 1999 in a sensibly open and transparent fashion. It wasn't sensible. When you're selling a big amount like the UK did, 300 tons, you don't announce it to the market. That's why it went down. People knew you were going to sell it. They front run you, right? People are not stupid, FT. You're stupid, FT. Whoever wrote this. The sales sparked such a fall in the global bullion price that a group of central bankers signed a concord limiting such sales. That was the agreement that was actually dropped earlier this year in September. That has recently been superseded by a new agreement providing for limited official sales. That one I meant. So here we go. This is their conclusion. Given the pointlessness of holding gold, the speed of its official sell-off scarcely matters, unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply some irrationality on the part of the market. But then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. Whatever the speed, the direction is clear. Gold is... So this is how they end. Whatever the speed, the direction is clear. Gold is on its way out as an investment and reserve asset. 3 cheers for that. So there you go. Don't believe anything the mainstream financial press says about gold. They don't want you to hold gold. Don't hold ETFs, GLD especially. Hold the real physical thing. If you really want to fight the bankers. And if you want to help my channel so I can expose these shenanigans by the central bankers, by the mainstream financial press, by my FT War on Gold mug, where I've put a picture of this editorial on it, so it can remind you every time you get discouraged by the price action in gold, you read that and you see how wrong they have been and how wrong they will be in the future. So let's quickly go through the markets. This is a longer video today, but anyway, it's 8:30 a.m. London. We got spot gold at $14.84, so we're up $3.50. Yesterday, of course, stock markets rallied strongly. Gold and silver were hit, but nothing changes. So the range has been 1478.45 to 1485 this morning. Silver is underperforming today. It's down 9 cents or 0.5% at 1731. I think the 1730 level is a key level here. Range has been 1719 to 1748. The Dow is down 50 points, just below 27,000, 26,970, down 0.2. 0.2%. S&P is down 6, 29.89. NASDAQ 100 is down 12. So stock market's down slightly, down 0.2%. The pound is down 0.2%. We saw another strong rally in sterling yesterday to do with this Brexit uncertainty. Today we're back down. We're at 127.06, down 78 pips, or as I said, 0.2%. Euro is unchanged, 110.40. Dollar's down 0.2% against the yen, Japanese yen at 110 at 108.64. And the dollar is up 0.25% against the Chinese yuan at 710. WTI crude oil, 52.94, up 0.2%. Brent is also up 0.2 at 58.70. I'll finish off with the 10-year yield and bond market. 10-year yield right now down 5 basis points at 172, even though we're up from when I spoke yesterday, but we're down from the close yesterday. The 2-year yield is down 5 as well at 157. Keep stacking. Fight the bankers and the central bankers. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide as well if you enjoyed the video. If you haven't subscribed yet to the channel, think about subscribing. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.